For cannabis investors, 2021 started with so much promise on the back of higher expectations of federal legalization, only to end on a sour note as disappointment in Washington. No surprise. But if you think about valuations for the sector, we come into 2022 cheaper than we went into 2021. The sector traded 12 times EBITDA coming into 2021, ends the year at around 10 times, and looks even cheaper on 23 multiples. So for investors, the earnings make sense. The profitability makes sense. The outlook for more states coming online, so the addressable market growth, is something that gives cannabis investors the confidence that this is a sector that offers higher growth than many other sectors outside of cannabis at much lower valuations. As we look forward to 2022, one of the big themes for cannabis investors should be the emergence of the brands. So the excitement of investing in cannabis, demographics, consumption, growth of the addressable market is part of that exciting growth story. The other part is these are the next wave of big consumer packaged goods companies. And if you think about the sophistication of the spirits industry or the tobacco industry, these are industries that a lot of folks believe you are going to see cannabis companies begin to emerge from the pack, those that have established brands. In fact, Tilray is a company in CNBS, our ETF, and if you listen to Irwin Simon on Closing Bell earlier this week on CNBC, you'll hear how that strategy comes into play.
You can't build a company just built around speculation of regulation. And, it's regulated from adult use and medical use in Canada. You got to build your businesses out there. In regards to Europe, we have 20 countries today that allow medical cannabis. We got to build it out there with the expectation that legalization will happen. What do you do in the U.S. while you wait for legalization? You build out brands and categories with adjacency to the cannabis industry, like the spirits business, like the beer business, like the food and hemp business. And ultimately, one day, you will see a beer out there with THC. You will see a bourbon out there with THC. You will see edibles. And we have the brand 420, the Breckenridge brand, that consumers will be aware of.
So again, emerging brands at a time when there might be concern around margins is how these companies will not only endure and build for the longer term, but actually insulate them from margin pressure and some of the concerns that I think a lot of investors have felt cannabis companies will be exposed to as prices come down in the sector. So ETF investors, why am I wearing this jacket? Well, this is to punctuate the excitement around investing in this high growth sector that is the cannabis industry. But for investors, much like other thematic sector investments, investing via a cannabis ETF makes a lot of sense when you consider the diversification that you're able to employ towards a sector that's evolving very quickly. Our ETF, CNBS, is an active ETF. And being active in an industry where new listings, corporate governance changes on the macro and the federal, means that we have the ability to quickly adjust. For investors that want to be exposed to this industry that's changing by the day, in an active ETF strategy, you have the ability to quickly adapt. And finally, when you think about portable alpha and some of these buzzwords in the ETF space, our ability to allocate within the portfolio to certain parts of the sector that we think happen to be particularly interesting. For example, in 2021, the debt markets in cannabis became wide open to the extent that relative to the equity markets, a lot of companies were able to list debt products. There were new listed debt products that we were able to own in the portfolio. That has been part of a view towards diversification, and especially in volatile markets to the downside, debt instruments, especially when they are credit-based instruments, have actually been very defensive. Owning a global portfolio. So at times, unquestionably, the view has been the U.S. market is the biggest, most interesting market out there. And we agree with that. And our biggest exposures at the top of the balance sheet are companies like GTI and Curaleaf. But having positions in a company like Tilray and having the best operator that we believe in Canada gives us the exposure to a global portfolio that during different periods both of news flow and execution around the world, we feel this portfolio has the type of diversification and exposure that investors need for the long term.